Peter White, thank you for joining us today.
My pleasure, Matt. Thanks for having us.
The ACCC's decision to exempt Aussie home loans from third-line forcing practices has been widely reported. What is the FBAA's position on this?
Well, the FBAA is obviously not particularly happy with the outcome from the ACCC in regards to that. And I also think that it's further spread than just being the association not happy with it. I mean, I think brokers nationally need to be very concerned with that outcome. There's some real issues that sit out the back end of that in regards to the New South Wales Office of Fair Trading, who have turned around and supported the decision, or actually went out before the decision was made saying that they endorsed it as such. Where it's rather strange where you've got the Office of New South Wales, the Department of Fair Trading in New South Wales turning around and saying we support a non-competitive regime. It's rather a strange decision for an Office of Fair Trading to say that we support non-fair trading. There's not a lot of logic to it. And also too, I think there's a myriad of events that could come out after this I think should concern most people in the marketplace, or most brokers in the marketplace I should say. And I personally think the ruling was crazy.
Should there be concern amongst brokers and mortgage introducers that lenders are contributing increasingly significant financial and human resources to the MFAA?
I guess it's, in one respect, it's probably not appropriate for me to comment on the MFAA's use of their funds and so on, but I guess we can reflect on a bit of history within the industry, whereby the then MIAA is being heavily supported by large amounts of cash into the association from banks, and the outflow into the marketplace, if you speak to the majority of home loan brokers in the market, and even today that myth still exists, is that everybody assumed you had to be a member of the MIAA to be a home loan broker, which is just completely wrong. And I guess there's a bit of, or one can only assume there is a bit of influence being portrayed or being undertaken by way of banks putting large money behind an association, and that association, or those banks, supporting that association in a single mindset. That over the years has started to, or those walls started to break down a bit. We've worked quite tirelessly to ensure that that myth is dispersed, and most of the senior executives do not support a one association theory. A lot of the issues have been that the BDMs, or possibly the state managers, have been insisting MIAA, and some of those areas may have even had conflicts of interest potentially where the state presidents or the state executives within banks were also holding senior roles in the MIAA. So potential conflicts of interest there. But today, especially one of the benefits, I guess, of what we talked about before with the ACCC that's come out of that is a couple of the major banks came out openly in writing to the ACCC saying that they openly support both associations equally.
The FBAA has recently announced a campaign centred around anti-money laundering. Tell us a little bit more about this initiative.
Sure. The AML legislation has now come out from Parliament and been given its royal assent, and by the 12th of December this year, compliance regimes are now needing to be in place by all brokers in Australia. And that has a significant impact into this industry. And the FBAA is fortunate to be the market leader in AML compliance today, as we've partnershiped with Deloitte in regards to providing a solution to brokers. We've been in lengthy communications with AUSTRAC, and AUSTRAC actually presented at a seminar we had the other day in New South Wales in regards to where AUSTRAC is standing for compliance into the anti-money laundering legislation. And we've also got the Australian Tax Office as well, who we're also dealing with in this regards. That when you look at risk profiling products that are associated with the new legislation, so okay, if there is an issue with anti-money laundering, and also it's more than just that too, we've got to remember it's also counter-terrorism financing. So the actual legislation is twofold. And when you look at then saying, well, if there are potentially risks, what are the risks to our industry? And the risk to the broker industry is rather significant. And I think most people are fairly apathetic towards it and don't actually understand all that could be considered, all that could be impacted in their day-to-day business operation. Classic example would be low-doc lending, and that's nothing against that style of transaction, except to say there's potentially a higher risk of that style of facility being used, where people don't want to disclose their incomes, but they want to raise debt against a property asset and not really wanting to say what that money is being used for. Now, who knows what the funds are being used for? The reality with the legislation is going forward is that you can't guess, and if there is a perceived risk or a suspicion of risk, then there's a reporting accountability and responsibility that has to be maintained. And the fines, if you're in breach of the Act, go up to $11 million. So I don't know any broker in this country, bar Mr. Simons, who possibly could afford that.
There is growing speculation that the boom times of the last 5 years are slowing. What advice can you give mortgage introducers to ensure strong continued growth?
I think for everyone in the marketplace there's some old basic principles in regards to relationships that you have with your clients that should always be maintained, and possibly when the market gets a bit harder, those sort of things become more critical. So your relationship with your client, to me, is one of your fundamental and paramount building blocks that everyone should have in their business. If your relationship is good with your client and that it is strong and in regular communication, obviously they're going to come back to you when they next look to take out another facility, and they'll refer clients to you. So there's probably many things people can do when times get tougher, but if you've done the right thing by your client since the beginning of your transactional history with them, then when things get a bit tougher, the first one they're going to turn to is firstly the broker to say, hey, I need to release a bit more equity out of my property, or want to put a pool in, or do a new kitchen, whatever it may be, or rates are going up, can you get me a fixed rate? And then if that relationship's right, they're going to refer their friends to you. So my advice is to ensure that that relationship is strong with your client base. I'm Peter White from the Finance Brokers Association of Australia, and you're watching LCTV on Lending Central.